All right. Hello, everyone. As always, welcome or good afternoon, my Facebook family and friends. It's beautiful, sunny, at least here in Cleveland, Monday morning. Hey, sis. Hey, Christy. I love to kind of just take a few seconds and let some people kind of roll in a little bit and see who all is coming to join us before we kind of jump into some things. I typically love to take this opportunity. I know we used to say Mondays is crazy, but all of our days are running together. And so, Courtney, thank you for agreeing to join and come with me this afternoon on a Monday. I guess that's today, right? Monday. But today's topic is we want to have a conversation about really what's the 411 on mortgages today. And just again, as a little backdrop, this is something that kind of morphed in out of a need of necessity. And with situations such as this pandemic that happened, I realized that there was an opportunity to really provide a lot of information. Because while a lot of people know me as a realtor, people don't realize and may not have known that I'm 22 years of financial services, that I'm also a financial advisor. And so a lot of the information and tips and tools have been around finances, but it would be remiss of me if I did not take a moment to also still pull in the real estate aspect of things as well, because that information is critical also. And so beyond being a financial advisor and a realtor, I'm here to, as I always, I'm here to help. I'm here to add value. I'm here to provide information and resources as possible. And so with that, I would love an opportunity to, before we jump into the meat of this, to kind of recap some of the previous session. This is information number 6. So while there was previous ones, there were some really great things that I would love for people who might not have caught those other ones, which please, if you would, follow my YouTube station at Ask Tiffany H is my YouTube station, where all of those are warehoused. So you will have an opportunity to see them without having to scroll through my Facebook page and find them. But a couple of the recaps is that during this time, like any other time, it is really important to do a couple things so that we can kind of leverage some stability. And one of those was to make sure at this moment to create a budget. If nothing else, write down all of your expenses. I say this, and this is the most critical, and I want to say this sometimes so I'm blue in the face, because if you have an opportunity to write down all of your expenses, you at least know where you stand. You at least know what resources or tools could be out there to most help you or be most beneficial, because you can see it. It's right there in front of you. And so even if you don't make the full budget, at least write down all of your expenses. And that's so that number 2, if you pick up the phone and call all of your creditors, right? All of these companies are out here and they're providing resources, but you have to be proactive and not reactive. There's no assumption that every type of student loan is automatically being provided a forbearance. So just call and check. A lot of them are doing 0 interest. A lot of them are automatically waiving the payments, but to err on the side of caution, don't be reactive, be proactive and call your student loans. Call your credit card and ask them what programs do they have available to help you. And you'll be amazed. Each one of them has something different. Now, as it relates to your mortgage, the last I heard, again, a lot of mortgage companies or sponsors are still figuring out how they're going to provide assistance. And so this is a moving target. And I try to share with people that you got to stay up to date, because what was in place yesterday can quickly change tomorrow. So just be diligent. If you called your mortgage company before and they really didn't have anything ideal, call them again this week and call them again next week, because things are quickly and very rapidly changing. Number 3 is to make sure you file your taxes. Now, there has been some changes. In the beginning, you had to at least file your 2018 or 2019 tax returns in order to get your stimulus. But just like I said, things are constantly changing. They've made a couple updates. A few of the updates that people who were on Social Security, they were going to tie into that. Well, I guess they heard a lot of the concerns that was out there. You have opportunity to go to irs.gov, you are able to enter in your information. And even if you haven't filed your 2018 and 2019 tax returns because you fall below a certain income level, you are able to enter your information out there and you're able to still be able to get eligible for your stimulus checks. So again, this is crucial. I like to kind of do these updates and recaps because information is changing so quickly. And then lastly, please make sure, please, you stay abreast of what's going on with your credit. Things are changing. Just check in and get your Credit Karma. We had one of those episodes, gave you some tips about that. So it's important to know and keep an eye on your credit. I provided a roadmap to talk about how you can really be in a much better position now because of this if you do some of those things. But remember, if you're implementing these in your savings, please save the money for savings' sake. Don't save the money and now go work on the project in the house, put in new windows and put in new floors. That's not what this is about for right now, because we don't know what's coming. We don't know how long. We don't really know what the financial impact ultimately is going to be. So for this moment in time, just save for savings' sake. And this is how you're able to utilize and leverage this opportunity for a much better position in the future. And then lastly, for my small business owners, there's tons of resources. And when I say small business, I mean the micro enterprise, the solopreneurs, the mom and pop stores, as we can call them, realtors like ourselves who are in this industry. We're 1099, and so we haven't paid into unemployment. And while there's going to be some tweaks about how maybe we could be eligible for unemployment in the state of Ohio, it's not there yet. But there's a lot of resources. There's a lot of grants that are available. So let's make sure that we stay tuned for those as well. So with that being said, it's just a quick recap. I would love, I wanted to come today and provide information on 411 on mortgages. So I wanted to bring out, and I will allow Courtney to introduce herself so I won't mess that up and flubber through. I would like for her to introduce herself, the company she's with, and there were a series of questions that have been posed to me that I will share, and here we'll have from the expert that she'll answer those questions for us as it relates to mortgages. And don't forget, in the meantime, as we're talking, to please post your questions as well. So with that being said, Courtney, thank you so much for taking the time to come and be with me and join me today. And if you would do the honors to introduce yourself.
Well, thank you so much, Tiffany, for having me today. My name is Courtney Demarco. I work at Fairway Independent Mortgage Corporation. We are one of the nation's largest direct lenders. We do mortgages, so that is our specialty. I like to consider us the cardiologist of mortgages because it's our only focus, but we are in the top 5. So a very large company operating with a lot of national strength. But locally, my team sits here locally, and we cover all of Northern Ohio and are here locally, again, but a huge company with a lot of strength and power behind us. So it's definitely great, especially during the past couple weeks where some other companies were having some issues and problems and things like that. We're not experiencing that. I don't know if you want to go ahead and start asking me questions or... Yeah.
Sure. Okay, great. So thank you with that. And just as you know, I've done a lot of interactions and done a lot of things with Courtney, and I do rely on her as a very trusted and valuable advisor. So I'm glad to have her here with me. And not only her or anyone else, we're here to really provide tools and assistance. And so know that we're here to offer this help at this time. Some of the questions that I received is right now, this day and space, on a high level, can you just share with us on a high level, kind of what is the state of affairs as it relates to purchase mortgages and refinance mortgages with the new pandemic? How is it much different than previously, and kind of, where things stand because of this current health and economic crisis we're going through?
Sure. So, in the old days, a month ago, we did a lot of in-person and face-to-face meetings, and now not so much. People are asking for the Zoom calls for their consultations. People are asking to use our app. We can really do the whole entire financing process from beginning to end 100% over the telephone and online. Things that I've seen though is that people are applying for purchases every single day. We have not seen that slow down. I've talked to other people in other places and they have said, do you think people will continue to buy houses? Well, the interest rates are still low. So people are applying for purchases every single day. And so in Northeast Ohio, we are the home of the Cleveland Clinic, and we have so many essential workers. So one of the big concerns for people is unemployment. So obviously, if you don't have a job, you cannot get a loan right at this moment, okay? But we have so many people in Northeast Ohio that are essential or that are working from home, and they need to move, or they've outgrown their houses. They need more space. In some cases, they need something a little smaller because they can't take care of the big house anymore. And so thank God that real estate is essential, because these people need to buy, and they need to do it because it's a necessity. So the buyers that we are seeing, they are buyers that are ready to go. They don't just take their time looking around. They're ready to go. So we have many people applying every day, and that's for purchases. Now on the refi side of it, if you have over a 3.75, I would say that it would be a good time to inquire. The rates are still in the 3s and 4s. That is historically low, Tiffany, as you know. I don't anticipate them going up too high, too much higher right at the time. I am not an economist. I do mortgage lending. I don't anticipate them going up. I tell you, if they shoot up or if anything happens, I will let you know right away. I anticipate them hanging right around there for a while, maybe even getting a little bit lower. But the truth is that I've been in the business long enough that I was around when people were purchasing houses at 16%. And so people are going to buy houses no matter what the interest rate is. So when you need to borrow money, you're going to borrow it no matter what. So imagine you still get the interest rates that are historically low. 3s and 4s, that's great. Should they go up to a 5 or 6, you know what's going to happen? People are still going to borrow money to buy houses because people need to buy houses. So now is a great time to apply for a loan because the rates are so low.
Thank you. And then I share that, and just to put some more context to that, having to be out and providing assistance, I've had buyers where a first-time home buyer who's been approved to buy a house, they're excited. They want to buy a house. It doesn't matter, what the really rates are at those particular times, because that's the going rate. So it's across the board. But also specifically right now, we do put precautions in place. And so a lot of times we're only going to see houses that are currently empty. Not so good for maybe the houses where people are living in them. But there have been times where there are situations where we'll make sure that the house is empty, which we would do that anyway, and we'll have precautions. This time people see me with my mask on, have gloves, have my Lysol wipes and my can of Lysol. So there are precautions that we do put in place to make sure that we not only safeguard the buyers who are coming into the houses, but we're also safeguarding the people who live in the house, because we're bringing people from outside inside of their house. So to that extent, and even as a body, we have regulatory things and guidelines that we're doing to try to make sure people stay safe. So the industry market is still going. So thank you. And so also, with that being said, another question that I receive a lot is, what is the difference between a mortgage company and a bank?
So, in the lending world, there are brokers. Those are people who kind of shop you around and find a lender for you. And then they charge a fee for finding that particular lender for you. So those would be called brokers. Then you have what's called direct lenders, like Fairway, or a direct lender, and a lot of other local lenders are. And all they do is mortgages. They originate the loans themselves. They're going to go ahead and do all of the operations pieces behind the scene themselves in most cases, and basically loan you their money, and then they sell it on the secondary market or transfer servicing, which is very common. So that would be a direct lender. Now, banks, banks, you can walk into them. They have these kind of brick and mortar places. You might do your checking there. You might have your savings there. You might have your investments there. Perhaps your car loan is there, your home equity line of credit. In any cases, credit cards, they take deposits. So banks are FDIC insured. In a lot of cases, sometimes banks offer portfolioed products, meaning they don't sell those loans. So I could do a certain type of loan. Let's say it's a construction loan. Those are very commonly portfolioed products. And the word portfolio means that the bank is going to keep those and you're going to make your payment to the bank. And so a lot of times those are more specialty loans that are considered portfolio. So you're not going to see a first-time home buyer necessarily or a VA loan be portfolioed. They would be their specialty products. So you go in and you make your payment to the bank. Now, with that being said, because they're portfolioing those products, they can make up whatever rules they want when they're lending, and they can change them every day. And I'm not saying that's a bad thing. It can be a very good thing because sometimes the banks can do some really kind of cool, creative things. The banks are known for their construction loans, jumbo loans, doctor loans. In some cases, there are, like my best friend works at a bank that has a first-time homebuyer program that requires zero down with no PMI, and they're portfolioed products. But with that being said, they do make up the rules. Now, I don't know what happened to Tiffany. You're back. I lost you for a second.
Yeah, we lost for a second.
Okay, so they make up their own rules and they can change at any time. And so if they want to require higher credit scores, they can. If they want to require you to have more money in the bank, they can. Some of their different, we'll call them guidelines, they can add extra rules to them if they want. But the biggest thing with banks is that they're usually FDIC insured and they have other products available, not just mortgages. So all we do is mortgages. And then, of course, there's the brokers and they shop it around for you. So it's really between the three. Those are the three different choices you have as a consumer.
Right. So thank you for sharing that. And then also putting it a little into context to reiterate. So I, as a realtor, if I have a client, I do not necessarily direct them one way or another. They typically get that information, but it's important to know that your realtor has a relationship with them, and we work with whoever they decide to get their financing with to get you from point A to point B, whether now you're a current homeowner and you're looking to sell your house and then having to go buy another one, first-time home buyer, or even if you're in the process of building a house. And so today, the interest rates are very low, and interest rates is not a cookie cutter across the board, but they pretty much hover around the same,
Yes.
one of those entities that you do provide. So thank you with that. And so speaking to that a little bit, share with us that in this current state of affairs, and so I got to ask this first because it's a great setup question, because I, as a realtor, a lot of times run across people and they are a little remiss when I ask them, have they obtained their pre-approval? And they're kind of taken aback, and they take that as if for some reason I don't want to help them, and clearly that's not the case. So can you share with the audience the value of why we ask for them to get their pre-approval before home shopping?
So there's a couple things, even before the pandemic that we're in happened, many sellers do not want people coming through their house just looking around, right? It's not Cedar Point. It's not the zoo. You're not just coming through here to see what I have. And there are many sellers that feel that way. Realtors are obligated to bring people through that are ready, willing, and able. And they can't you're able if you don't have a pre-approval. And so the word able to purchase, you either have the cash money in the bank for what that seller's asking for, or you're showing on a piece of paper that a lender said you can borrow the amount of money that they're asking for their house. So if your realtor can't supply that to the other people, what do I want you traipsing through my house for? I've got to pack up my stuff. I've got to pack up my kids. I've got to vacuum, maybe spray, light a candle, bake some cookies, all those things that go into having the house ready for people to come see it. It takes people time. And in many cases, they have to pack up a family or pack up a dog. And you can't actually buy that house. If it's my house, I don't need you coming through there, right? And so that was just the way that it was before. Realtor needs to make sure you're ready, willing, and able. There's no point in showing you a house that you can't afford to buy or that you cannot buy, to cover yourself, to cover the realtor who's putting the time into taking you there, and the people on the other side of it who own the house. But in today, I mean, it gets so much more serious. So all of those things still apply. But let's consider the fact that, a family is quarantining in that house, and you're going to come through there and they don't know where you've been or if you've been quarantining, and neither do either of the realtors on either side. And the same thing, now they have to pack up and make sure everything's clean and go through extra steps, and they have to remove their family and go somewhere. And where are they going? Go sit outside? Where are they supposed to go? So are they just going to go sit on a picnic bench? I mean, it was cold yesterday, and then in many cases, then they don't want to come back right away because they want to let it, air out. And so for safety reasons, for the realtor and the family that lives there, and for yourself, you need to be ready to go. You need to be approved. And if this is one of the houses you're very serious about, then your realtor can, through. And leading up to, there are many virtual ways to look at pictures and videos and things like that. And then when you've narrowed it down and that this is in your top 3, and you're going to come through masks, gloves, booties, sanitizers, and things like that to protect yourself and the family that lives there.
Absolutely. I think it's also critical, again, to add some context to that is because several situations where people would send me some things like, oh, I've seen this house and it really looks nice and ready. And of course, I would ask them, how do you get your pre-approval? And they're like, no. I said, well, you need to go do that first. And, and just case in point, that particular property, by the time they get their pre-approval and came back, because it was a really nice house, right. And so you have to be willing, able, and ready to purchase. And so it's unlike buying a car where sometimes you go shop for a car and then you get the financing in place or they approve you for that particular car. It's different from that. You got to be able to get your purchasing capacity first, so we know how much you can buy. Then we'll tailor our searches towards that. And then you're always able to negotiate and be able to strike because you have that in place. So that's really good.
And just to kind of piggyback off of that, so if you're someone that you are serious and you're ready to buy a house, if you don't have that pre-approval, exactly what can happen. Houses are going very quickly and many times in multiple offers. So if you need to move and you need to move quickly, having your pre-approval ready to go before you go looking, that way, as soon as your realtor gets home, she's already writing your offer.
That's right.
Your offer is already being written. She doesn't have to wait for you to get everything you need with financing. She's just ready to go. And I think that that's a huge part of it, because in some cases, people know that they need to move. But if you have a sense of urgency and don't have that pre-approval ready, you can walk away from some of these houses in years when you find out that somebody else was already approved and
that's right.
The seller accepted their offer and you weren't ready to go.
That's
and
right.
so we don't want that to happen. And that's happening every day.
Yeah. So typically at a halfway point, I would like to be able to provide our contact information. And so for those who might not see the whole episode or information session or catch it at the beginning and end, if they catch us in the middle, they're able to get in touch with us. So if you could provide your contact information, so if people have additional questions, they want to follow up with you because they're interested in maybe refinancing or getting their pre-approval, they can contact you.
Sure. So my name's Courtney Demarco, and my cell phone number, you can call me or text me, 216-235-3886. I would like to talk for 1 second about refinances, if you will. There are lots of companies out there who will churn and burn refinances all day, every day. It is very, very important to understand what you're accomplishing through your goals of refinance. If you somebody that has over a 3.5 or over a 3.75 interest rate, what we would want to do is actually take a look at your mortgage statement. We want to look at your mortgage statement, and it's not just to see what your interest rate is, but we want to see how many years you have left on your house. Because in many cases, a lot of lenders will refinance people and they charge thousands of dollars to do it, and all that they do is stretch out the term, meaning you're just paying on your mortgage longer. You're not necessarily saving any money. So we'd like to do a thorough consultation and really ask that when you call, have your mortgage statement ready. Then we'll look at the rates. We'll look at the situation you're in. And if we can save you money, we would refinance. Lots of people who will refinance you and you think you're saving money, but in the long run, you're really not. So it's important to understand that and have that consultation. And I know, Tiffany, as a financial advisor, those type of things probably make you cringe. And that could be a whole other episode. So just know that there are lots and lots of lenders who will refi the heck out of you, and you will be owing on your house until you are long gone. And so it's nice to be able to build equity and keep your payment where you want it and actually have equity in your home, and eventually one day be mortgage free. That would be a great thing for all of us, right? And so happy to answer those questions, but we want to make sure that you're actually getting the right savings out of a refinance, not just stretching out your term.
Right. Thank you. And so Courtney's number again is 216-235-3886.
Thank you.
Always, you can reach me at asktiffanyh@gmail.com. You can also follow me on Instagram at ask_TiffanyH. That's ask_TiffanyH on Instagram and Twitter. And we have there for a moment Courtney's number if you want to, of course, be able to contact her. And this is part of the value of making sure you have someone who's really looking out for your best interests, is because everyone knows that, yes, I am a financial advisor. So she was very diligent to put in her disclosure about how she want to make sure that when she talks to individuals that she's really providing if this is a valuable tool for you and not just refinancing for the sake of refinancing. Now, of course, there's people who need it because of certain circumstances and need to pull them out. But again, how prudent is that to have an organization who's willing to contact you and engage with you, make sure it's the best fit for you versus just another transaction. So for that, that's very valuable. So I hear that, excuse me, interest rates are at this point still relatively low. The market is still going, although we're in this pandemic, while things have slowed down, maybe in purchasing, I realize it's kind of increased a little bit in refinancing. But if we're talking about right now purchases, can you share with us the type of products that are out there and kind of how they work? For example, at a high level, for example, the difference between FHA and say conventional or VA.
Sure. So FHA loans and VA loans, those are great loans. The VA loan is actually the highest performing loan in America. Means veterans, they're proud to own their home. You know, they've worked hard, they've served their country, and they make their mortgage payment every month. So that is the number one performing loan in America. So for those who have served our country, it's a wonderful benefit for you. It allows you to be able to purchase a home for zero down, meaning no money out of your pocket. We love working with veterans. And again, one of the best loans in our country, and for 0% down. So that is great. An FHA loan, it's a first-time home buyer loan. So those are people, usually it's your first house. You know, you don't necessarily have the perfect credit. You don't necessarily have that 20% down, but FHA will allow you to buy a house with 3.5% down. So in some cases, just a few $1,000s out of your pocket to move into a house. Which is great. So those are the two loans that are very, very common. And then for those of you who already know, there is another loan type out there. That's the conventional loan. And those usually are around 20% down. Those are usually a little bit higher credit scores, more money down. And those people don't pay what's called private mortgage insurance, which on the government loans or FHA and VA loans, they can end up paying private mortgage insurance. But those are the three type of loans. And another loan that I love to talk about, because we do live in the state of Ohio, is the OFA loan. So this is through our Ohio housing finance agency, they have put together a program where they have so many thousands of dollars each month to go to Ohioans for down payment assistance. Now, the thing that's great about this, that I love so much more than any other down payment assistance program, because there's usually strings attached to all the other ones. And in some cases, I've seen them not be the best deal, if you will. So if you were to come to Fairway, and we are the #1 OFA lender in the state of Ohio, if you were to get your loan with us, we would request your grant money from the state of Ohio. That's called OFA, and we can get you up to $5,000 to use towards your down payment, and that's it's a forgivable grant, meaning you don't have to pay it back. Great tool, especially if your credit is decent, but maybe you don't have a ton of money in the bank, right? You don't have 20% down, and in some cases, maybe you don't have the 3 to 5% down, or you do, but you need it to do other things, like getting into the house and getting things ready and getting things set up. This allows you to be able to get in there with no money out of your pocket, and you don't ever have to pay the state back. So that's really kind of a cool and unique situation. And then in Ohio, through OFA, if you're what we consider a hero, and so many heroes right now. So really kind of hoping that some people's ears perk up. But through OFA, if you're a hero, and we know who these people are today, they are firemen, police, your healthcare workers, your nurses, your educators, any of those frontline people that are first responders and paramedics, those are heroes. And through OFA Hero, not only can they get the down payment assistance, but they're also going to get a 1/4 point saving on their interest rate. Okay. And then there are some other discounts that we can talk about if people were to reach out to me personally. But I think that is a wonderful loan for Ohioans to consider if they qualify for it. It's a wonderful program to be able to qualify for. But that first time home buyer loan is so very popular for people when they're first buying their house, because you don't have to come up with as much money out of your pocket. And so that can be very helpful for people in the beginning stages of home ownership.
Thank you. So we have one question that popped up. It says, how far removed from home ownership do you have to be to qualify for first-time home buying?
So am I understanding this? She wants to know, when is the good time to start?
No. So sometimes there's a gap. Like you might have owned a home maybe 5 years ago, but you sold it for whatever reason or whatever. And so what time having previously ever owned a home to be considered first?
So that's a good question. So with an FHA loan, depending on if your other loan was FHA, it depends on what type of loan you had in the first place. And it also depends on what your mortgage payment history looks like. So did you pay your mortgage on time? Is that mortgage paid off? Do you still currently have it? So there's a lot of other sort of layers that come into place, because to answer your question, you can get OFA down payment assistance and it not have been your first house. You got an FHA loan and it not have been your first loan. So the answer is yes, you can do both, but there are some other questions. And those questions are, is that house still in your name? Do you still have that mortgage? Is it paid off? Did you make those payments on time? So, Christy, if you or anybody has a specific, let's get the specifics answered, because that's a high-layered question. But the general answer is yes, yes, yes. You can have already owned a home and still utilize FHA and OFA.
So here's a clarifying question. We know we said 0% down for VA. For FHA, was that 3% or 3.5% down?
That is 3.5% down for FHA.
Okay.
And then OFA is 0% down.
Also. Okay. Is there a world of a 5% down somewhere?
So absolutely, through conventional financing, you can have anything from 20% down all the way down to 3% down. So we have programs for conventional buyers that can put down 3%, 5, 10, 15, 20.
So that's 3.5% for FHA, 0% down for VA because they're veterans, with the OFA program because they're providing the grant that would also allow you the 0% down as well. So speaking of down payment, can you share with the audience to clarify the difference between your down payment and your closing costs?
Absolutely. So I'm very passionate on this topic. You're going to be sorry you asked me. So
Okay, you have 2 minutes.
I'm gonna wrap it up in 2 minutes. So listen, with closing costs, your lender is going to have fees, your title company is going to have fees. You will have to pay for your homeowner's insurance premium out of your pocket. You are also going to have to set up and pay into what's called an escrow account. Now, your insurance, that's something you have to have if you're financing, right? The bank isn't loaning you money and then the house burned down and then what? Then how is their asset covered, right? So you have to have homeowners insurance. And government loan, you absolutely, those are the FHA, VA, and OFA loans. You must set up what they call is an escrow account. That's going to be money that you pay on top of your payment or principal and interest every month to go in to cover your taxes and insurance. So when you close on your home, you're going to be paying upfront. The seller will pay taxes. You will be paying upfront for your homeowner's insurance, but you have to set up a buffer so that as you begin to make payments every month, money will go into your escrow account so that as you make your payment, your mortgage servicer can also pay your taxes and insurance for you. You will not write those checks. So you need to pay your taxes and insurance, your escrow, but you will also pay a lender for their services. You will pay a title company for their services. You will perhaps pay for a survey every single time. So those are fees that have to be calculated on top. So if you buy a house for $100,000, no, you also have to pay these other things. So those are costs that you have to have in the back of your mind. And here's the part where I get passionate, right? There are different costs from every lenders. And so my advice to anybody watching is to be very careful, especially with when you're being telemarketed, when you see ads on the internet and on Facebook and things like that. Sometimes those lenders are charging $3,000, $4,000, $5,000 for you to get your mortgage from them on $100,000 house. And that's more money that you either have to ask the seller to pay for in a seller concession or that you have to finance or come up with out of your pocket. So you're only allowed to borrow $100,000 and your house is $100,000, coming up with your down payment and all of these closing costs. So I will say this, on air, I'm not supposed to talk about fees and things like that, but I've done my homework and my company's are on the much lower end. They are very, very competitive. I feel good at night when I put my head down on my pillow because I know that in every single case, we are saving people thousands of dollars every single day. I have people come from other big lenders and places that they got approved online. We end up saving them $200 a month and at times $3,000 to $4,000 on their closing costs. And that is huge, especially for a first-time home buyer. And people who aren't a first-time home buyer, just because you got it doesn't mean you want to throw it away, right? Just because you have the money, why would I throw money away to get the same thing somewhere else that I can get over here for thousands less? And so my advice is this. Be savvy and know that you have options. Even if you don't think you're the best, maybe you don't have the best credit. Maybe you don't think you have, maybe you don't think you're A paper. Maybe you're nervous and you think, oh, I'm just happy that somebody approved me. No, if you're approved there, you can get approved somewhere else too. And you can get great service and you can save money and you need to be savvy. And if you have one pre-approval, get a second one and let's look at them side by side together and see if there's an opportunity for you to save money. That's it.
Well, thank you. See? So at the end of the day, just to kind of recap that part a little bit, it's just really important to everyone just to do your due diligence, whether you're buying or you're refinancing, to take into consideration the fees and everything and make sure that you have an advisor that are a realtor that's working with you or a financial advisor if you're just refinancing to just review those things to make sure that they're just not really out of the ballpark too excessive or anything of that nature. And so that's why I always share with people that's important to have a financial advisor to help you, or planner to help you look at your entire financial portfolio and all of your other finances to have a good input. So as we winding up just a little bit, we have a couple of questions here, but if you have other questions, please do post your questions below. If they're general high-level questions, if they're detailed, we definitely find a way to be able to get in touch with you offline to answer specifically. But if you have some general questions, please post your questions below. So this is going to be a two-part question. Here it says, what credit score is needed to be able to apply for a mortgage loan now, 600 plus, or what is needed to apply? And so if you could just answer kind of like in today's, because we hear so much moving because of this pandemic and some of the banks kind of restricting some of their guidelines because of the state that we are in right now, kind of what is the credit score requirements on a high level today?
So in the grand scheme of things, an FHA and VA loans require a 580 credit score. That is the requirement on government loans, 580 credit score. With the OFA loan, if they're going to give you that down payment money, they want to see that you're a little bit more credit savvy. Those loans require a 660 credit score. Now, for the OFA Hero, I think they give them a little bit more of an allowance, and those can go down to a 640. But a 660, I say for everybody else for OFA, and then for the Heroes, those go down to a 640. So the general rule of thumb is that you need to have a 580 credit score. Here's the thing, with the pandemic, a lot of this stuff is going to be case by case. Lenders want to make sure that you have job certainty. They want to look and see that you have a couple dollars in your checking account, because the truth of the matter is if you were to get laid off tomorrow and you bought a house, do you have any money in your checking account to be able to make your mortgage payment for 2 to 3 months before you go back to work? Those things make sense, though. That's there to protect you, and that's there to protect the lenders, right? Because nobody wants somebody to come out and get all excited and sign their paperwork, buy a first house, and then here we are, pandemic, you lose your job, and you're already getting your foreclosure, right? Nobody wants that. So we want to go through and look and make sure, listen, are all of your credit cards maxed out? What's going to happen, if something happens during this pandemic? You owe all of this money. So we want to go through, and we would do this via Zoom or over the telephone, so that we can look at your credit report and say, here's what you owe. Here's what the mortgage is going to be. Let's see what you have in the bank. And are you going to be able to make all of your bills and all of your mortgage payment and everything, should you not have a job for a month or so? And Tiffany can attest to this too. When you qualify for a loan, we look to see what's on your credit report. But you may have a bunch of things that you enjoy and that you do in your life that aren't on your credit report. So if you're somebody that has 5 kids in dance class, and you have kids in a private school, or you like to go on vacation, you just like to club, or whatever it is, you need to have those figures written down too in your budget to see what are you really going to be comfortable with. And the big important thing is, right now during the pandemic, it's job certainty. Well, there will be multiple verifications of employment throughout your loan process, because they want to make sure that you're employed. So think about it like this, Tiffany, if you had 200,000 in the bank right now, and somebody came to you and said, look, I don't have any money in the bank. I don't normally pay my bills on time. Sometimes I pay them on time, sometimes I don't. You loan me 200,000. I need to buy a house, and I'll pay you back, and you'll make a little bit of money off of it. You're going to loan your money. No. So we need to make sure you have job certainty. One of the good things is too, this pandemic that we're in, it's like a rubber band. It's real tight right now. It's getting ready to snap. People are going to go back to work. People are going back to work, and that's great. In the past, you've probably heard things like job gap, and that's bad. You don't want to have an employment gap, missing months of employment. If you were laid off because of this pandemic, that is not going to hurt you. That is something as simple as a letter of explanation, where you write a letter to the underwriter and say, hey, I didn't work for 2 to 3 months because of the pandemic. They're not going to ding you for that. So that is good news. Here's what you need to be careful of. Should you be laid off, and I pray to God that nobody is, or that you don't become laid off. Should you get laid off, the most important thing you can do is maintain your credit healthiness. watch your credit, cut back everything you can, pay your mortgage on time, pay your bills on time. If you get that stimulus check, have it in the bank and be ready to use it to have to pay your bills if you need to, because what you don't want to do is miss mortgage payments or end up having your credit take a tank while you're unemployed. So that's the biggest thing, is keeping your credit healthy while you're unemployed. And if you're not unemployed, I mean, we should be trying to keep our credit healthy anyway. My suggestion too is, if you're not sure, if you're thinking about buying a house, but you don't know, then reach out now, because we can tell you you're either approved right now, or you know what, you're going to do ABC, you're approved in 30 days, or you're going to do ABCDE, you're approved in 60 days. Maybe you're going to do ABCDEFG, and we're going to get you approved in 90 days. And if you have a bunch of things that we need help with, we've got friends, Chad Kuzner at Credit Repair Resources. You know, if you have that many things, he will get you there. We'll get you in a house in 6 months to a year. But if you are 30 to 90 days away, we will walk you through it. But if you don't do what we need, then in 30 to 90 days, when you're ready to go, you're 30 to 90 more days out. So we need to start looking at it now and putting the plan together now, and getting you ready. Because if you don't get it ready now, then you're just, I don't know, wasting time. Right?
So that's a good point. And so just as a plug, and I didn't set Courtney up to this, because our information session number 4 was Chad. He came on and talked about the credit and things of that nature. And so it's great that you mentioned him as well. And also, as you were saying, this is why it's important to write down all of your expenses, all of those other financial tips that I said before. And even if you do become unemployed, call your creditors and let them know, so that you have things in place. So that if you call them, let them know what's going on, and they defer your payments and all that. You don't get the negative reporting, because they're there to provide you the assistance during this particular time. But the worst thing you do is ignore them or not call them and not be proactive. So thank you. So here's the last question, and I think this one is a really good one. As relates to being able, because there's a lot of people who are self-employed, 1099 individuals who don't have W-2 income or easily or consistently verifiable. So can you share the things that, if you're self-employed, about getting mortgages at this moment as well?
Self-employed people get mortgages every single day, right? So that's the first part of it. One of the issues can be that they're not filing their taxes. Well, to get a loan, you have to have your tax returns, 2 years worth of them. So you have to make sure that your taxes are filed. So have 2 years worth of those. So if you're somebody who hasn't filed taxes in many years, now is the time. And guess what? You've got some time. Another thing that can sometimes pose a dilemma for people who are self-employed, IRS, and I don't report to them, and neither does my company. we don't, make these phone calls. But here's the truth: a lot of people will show that they're making less income so that they can avoid paying more taxes, and that can hinder your buying power. So if you're showing that you're operating at a loss, or you're showing that you make $200 a year, how can we loan somebody money that's showing that you're only making $200 a year? And people will say, but I really make 100,000, but the paperwork doesn't show that you make 100,000. So this is something that you need to go over with your accountant, and that is to figure out how much money you're going to actually make and show that you're making, so that you have 2 years worth of that income to drive your buying power. So the more money you show that you make, the more money you can borrow. The less money you show that you make, the less that you can borrow. So getting your taxes in order and having 2 years of them, being in order. But self-employed people, they are fun to work with. They're entrepreneurial spirits, and they're excited and they're passionate. So if you can get your paperwork together, you can be a homeowner too. And I know a lot of accountants, Tiffany, I know you know a lot of accountants who really specialize in helping the self-employed people getting their taxes in order, and especially knowing that the goal is that they're gonna be purchasing a home. So again, if you haven't done that, now's the time to get that together so that in a few months you're ready to go and start the process of purchasing your home.
Absolutely. And so with that, I don't think we have any more questions at the bottom. I want to also just wrap up and say again, the reason I wanted to come out and do this is just to show and let everyone know that the industry, while we're going through a health and an economic pandemic, that the market and the economy is still going. We want to be mindful that, for those of us who are in the need to buy a house for whatever reason and you're still capable, do so. There are ways that we as professionals can help you facilitate that transaction. Don't let fear be the thing that stops and or hinder you. The market is still going on, which is a great thing, because we don't want to have a situation where we have a recession like 2008. Everyone's so fearful that the market dries up. So to that aim, things are still going. Industry is still very vibrant. People are still buying, selling, and don't forget investing into real estate as well. Yep. Courtney, if you could provide your information again, so if people have any questions, everyone, please do me a favor. There is power in social media. If you can please like, comment, and share this video, this episode, it would be very helpful. It does make a difference. I was actually contacted by an individual who asked if I would provide some additional information in some of their media platforms. So it does make a difference. So please like, comment, and share, because it makes an impact. Fairway, and Christy has captured Courtney's number there, that 216-235-3886. Fairway Mortgage. Our wonderful Courtney, her hashtag is keeping up with Coco. Courtney and I have been together in a lot of different endeavors, and so she's near and dear to my heart. So I thank you so much for taking the time to come out and be with me today.
Thank you for having me.
Absolutely. So everyone, thank you. Have a wonderful day. If you have any questions, still post them or reach out to us. And as always, I'm here to help. Ask Tiffany. Thank you.
Thank you.
Bye-bye.
Be well.